All right, let's get started on the first conversation. And I find that insurance is not something that we speak about very often. Of course, that isn't the case on this particular show because we're constantly telling you everything that you need to know about all aspects of insurance. Let's talk about a few important regulatory changes that are in the offing and everything that you need to bear in mind as you start the new year so that you have your bases covered, at least with regard to non-life insurance. Joining me now is Amit Chhabra, Head of Health Insurance at PolicyBazaar.com. Thanks as always, Amit, for joining in, and compliments of the season to you as well as your team and family. Let's start with a few talking points in terms of what's going to change in the new year. I believe with regard to the COVID-specific policies, there are a few changes that we need to talk about.
Sure, Alex. So I think first of all, a lot of kudos to the regulator, the IRDAI, the way they have taken care of the insureds when it came to COVID specifically. Because when I still remember, when COVID started in India, almost now it's about 2 years now, there was a lot of chaos, a lot of uncertainty that policy buyers had on, what's going to happen to my policy. Will my policy cover COVID or not? Because it was considered a pandemic. Some policies had a clause that pandemics are not covered. Then there were concerns around hospitalization at home. Will that be covered or not? To the last leg where there was a concern if vaccinations will be covered or not, telemedicine will be covered or not. So the regulator, I think, has all the way, been very, very considerate towards customers and policy buyers, and they have clearly clarified at various instances that health insurance is the most important prerogative for insurance companies, for all stakeholders of the insurance ecosystem. And it started by saying that one, COVID is covered. Second, they instructed all the insurance companies to launch the monthly mode of payments, which meant that buying health insurance became a lot more affordable, because instead of, let's say, paying 12,000 rupees in one go, customers could pay 1,000 rupees per month. So affordability became very relevant. To your point, also the regulator launched the Corona Kavach, which was a small ticket policy, which basically was targeted towards the lower segments of the financial spectrum where people could not afford a regular health insurance policy. They could look to buy the Corona Kavach, which was a cheaper version of health insurance, which covered only for COVID. And then all through in the last 1.5 to 2 years, the regulator has been very gung-ho about the Corona Kavach. They have made sure that all insurance companies offer it, they renew the policy. And also, they've also been very conscious around the pricing of it as well. So again, taking care of the policy holders' interest in mind, prices have not been allowed to increase substantially as well. So from a perspective of, if you are a policy holder or if you're looking to buy a health insurance policy, specifically keeping COVID in mind, there have been a lot of steps already taken by the regulator. And I think as the year moves forward, I think that's the theme that we are seeing. So price increases, for example, are not the norm. We are seeing very rare price increases in health insurance, which are completely which cannot be avoided. But apart from that, price increases are also taken care of. Then another important factor which came in was telemedicine, because what was the reality was hospitals were full. People didn't want to go out of go out of their homes to see a doctor. So telemedicine became a reality, and if your health insurance policy covers for OPD benefits, then telemedicine will also be covered by default. So that was again a very important change that the regulator made. Additionally, I think one very, very important factor that came in was hospitalization at home, which we realized specifically in the second wave. In a lot of the large cities, we saw hospital beds were full. So people had to be treated at home. There was a doctor who was treating either remotely, or there were ICUs set up at home. Again, which traditionally is not covered by health insurance policies. That also became clear that a lot of the health insurance policies started to cover it under the domiciliary hospitalization benefits. So I think all in all, just to summarize, there have been a lot of steps already taken, and the regulator is completely keeping the policyholders' interest in mind that health insurance is an absolute necessity right now. It's an absolute essential thing that everybody must have. And it's being made as customer friendly as possible through various regulatory initiatives.
Absolutely. And, you can't stress this enough. This is a pillar of your personal finances that you absolutely must have. Let's talk about some of the changes that are in the offing, and specifically with regard to home care and domiciliary treatment. There is the regulator is essentially coming in to say that it can be offered as an add-on cover afresh, there are certain changes regulatorily that are going to come into play. Can you explain what that is going to be?
Sure, sure. And so I'll try to explain this. It's a bit technical, but domiciliary hospitalization essentially means that if for some reason, somebody needs hospitalization, but you're not able to be at a hospital either because beds aren't available, which was the scenario in case of COVID, or because because of the patient not being able to get to the hospital because of some reason, either there's a let's say roads are closed, or there is a shutdown, or there is something like that. So in either of the scenarios, the patient can actually be treated at home itself through an organized hospital itself. So let's say if you go to any of these large hospitals, they will today be able to set up an ICU or a regular hospital setup at your home itself. A doctor will come and check you up every time to time. There will be equipment set up at your home to check your vitals, and if there's, let's say, any minor procedure also to be done, that can also be done at the home itself. That is what is called hospitalization at home or domiciliary hospitalization. Now, traditionally, very few plans used to offer domiciliary hospitalization, and honestly, it wasn't needed as well. Nobody ever thought that there's ever going to be a need for domiciliary hospitalization. However, in COVID, it became a reality. So what we are now seeing is more and more insurance companies are now offering domiciliary hospitalization as a part of the health insurance policy itself. It could be an add-on benefit, or it could be something which is built into the plan by default. That completely depends on the product construct and the product structure. But what we're seeing is more and more policies now are offering domiciliary hospitalization as a part of the health insurance product. There is one more thing which I like to stress on, which is again very relevant to this discussion, is coverage for consumable items. What this means is, so let's say if one is hospitalized, then at that time, one is the cost of treatment, the cost of medications, etc. There is another very large cost called consumables, which basically refers to items which get consumed during your treatment directly. So like, for example, if a doctor is wearing a PPE kit, that gets consumed during your treatment. The cost of syringes, cost of sanitizers, etc. All of this traditionally was not covered in health insurance policies again. However, what has happened is the cost of the consumables as a proportion of the total bill has increased significantly because of COVID, because there's so much sanitization now. Everybody needs to wear a PPE kit. They have to change it from time to time, etc., etc. So as a result, the cost of consumables has increased. And this started to pinch customers a lot because the amount became larger. So again, one of the things that's now happened over time is over the last 1 year is more and more companies now cover consumables also as a part of the standard health insurance product. It may be by default, or a customer may have to opt for a rider for it, which would mean slightly more premium. But essentially what it means is these consumables also get covered as a part of your health insurance policy, which essentially makes your health insurance a completely cashless experience. So there's actually nothing needed from your pocket to go. Everything else is taken care of by the insurance company itself. I think these are the two important things which are relevant specifically from a COVID perspective: domiciliary treatment, which means hospitalization at home, and secondly, coverage for consumable items.
Absolutely. And also certain aspects of the formalities associated with the signing on for a health insurance policy, right? Because there is also an extension of the deadline, Amit, for the paperless health insurance policy processing, and that is obviously on account of what we're seeing right now. Could you take us through what that means, the fact that it is actually a big benefit to users?
Oh, absolutely. So today, if one needs to buy a health insurance policy, it's all a completely online process. It will take you less than let's say 2 minutes to buy a health insurance policy. One can buy it on Policy Bazaar, one can buy it on an insurance company website, or wherever you want to buy from. But it is essentially an online process. You have to fill the proposal form. A very important factor to note is that one must declare any pre-existing conditions that you have had already. So let's say if you have diabetes or hypertension or any pre-existing ailment, very, very important to disclose that and dock it on the proposal form. That is very important. However, apart from that, it's a very simple process. There's not even a KYC required. It's a very, very simple process. One just has to pay and fill out some basic details, and in most cases you get an instant policy copy itself. So you would be able to download the policy copy within this 2-3 minute process. In case there is a medical declaration, like for example, I mentioned diabetes or hypertension or anything which you already have, there may be a medical underwriting process that takes place, which may take one day or so. It's basically again an online process. You would get a call from one of the medical doctors of the insurance company. They would ask you a set of questions, understand your health conditions, and basis that issue the policy. But again, it's all online from the safety and comfort of your home. You don't have to go anywhere. You don't have to go to a hospital to get a medical checkup done, which used to happen earlier quite a bit. So it's all online, very safe, very convenient, and you get your health insurance policy, which gives you coverage for COVID and for everything else that potentially can ever happen.
So even outside of health insurance, Amit, there are certain changes that are coming, and I think this would be a welcome step for the industry as a whole, right? Because the insurance regulator has in fact issued guidelines for a standard domestic travel insurance product. How big of a change could that be? What does that entail? And when does that come into play? I believe the 1st of July.
Yeah, that's right. So in fact, if you look at the chronology, right, there have been a lot of standard products which have been rolled out by the regulator. And I'll take 10 seconds as to why it's important. I think it's a very welcome step. The reason the regulator is doing that is because insurance over the years has become a complex purchase. And as a result, customers used to find it difficult to buy, or there used to be challenges later on at the time of claim, if the customer didn't understand, let's say, what they bought extra. So there, what the regulator is now doing is they are mandating insurance companies to launch standard products. It started with, for example, a standard health insurance policy, and then it moved to PA and travel, and now there's a domestic travel policy also coming in very soon. Essentially, it will be the same policy that the customer gets across multiple insurance companies. One can select basis price, but the underlying product remains exactly the same. The intent of this is, essentially to make buying even more simpler, seamless. The terms and conditions across products, across companies remains exactly the same. What this will, and I think specific to domestic travel, I think this is one sector which is very underpenetrated. Not a lot of people actually buy insurance for domestic travel. So I think this will be a real boon for the travel insurance segment, because what it will now mean is, there is more and more incentive or more and more simplicity for customers to buy domestic travel insurance as it comes in. And one can just choose basis price because the products will be the same across all insurance companies.
That indeed does make sense, because especially when it comes to a service like insurance, and you're talking about travel insurance, the requirement from the perspective of a customer is more or less the same. And if you have a product that ticks all of those boxes, it will obviously be a big boon. But speaking of, rules and what is going to be related to product design and pricing and all of that, the insurance regulator is also bringing draft rules for from the perspective of a standardization, or maybe even a rectification of something that might have flown under the radar. What's coming? I believe big changes are coming in terms of the pricing and designing of insurance products, right?
Yes, and this is, to be honest, something which has been in the pipeline for some time now. It started with some. I'll give you background. See, insurance is a very regulated product by nature. The objective of that is policyholders' interest should always be protected. So this means that any changes that have to happen in any insurance policy, be it life or non-life or health, in either of these scenarios, any policy changes that have to happen, they have to be very, very closely governed and approved by the regulator before any changes are allowed. However, now that's good from a customer perspective, right? But if you look at the opposite side, what happens because of this is it also somewhere slows down the innovation process, because everything has to be approved. It has to go through a cycle, so it does slow down the approval process as well. So one of the other things that are now started to happen is basically trying to make modifications in products easier, and it's very clearly defined what can be modified and what cannot be modified. Like for example, if there is a very small feature addition to make in a product, that's allowed. That can be done very fast. Whereas if there is a price change or something which is very, very large, it changes the whole construct of the product, then that's a very large modification. So that's not allowed. that needs a very large process. But any minor modifications or so, as they're called, they will be allowed to be changed, much in a much faster manner. So instead of taking a 3 month or a 2 months time for changing any benefits, these could be changed in a 2 weeks time frame. And this is happening across products. So it started with health. Now it's moving towards other products also. So in PA, in travel, etc. Now we are seeing the regulator allowing for easy modifications in the product structure as needed by the insurance company, or based on if one has to respond to a specific demand in the market. Or let's say, for example, if somebody wants to introduce something very specific to COVID in their insurance product, then if it's a minor modification, it can be done really fast instead of going through the entire modifications process, which typically used to take 2 to 3 months. So the intent is to make modifications easier and increase the pace of innovation, which I think is very important for the insurance industry to be able to respond to customer needs.
Very important, absolutely. And I'm guessing that based on the suggestions that have been received by the regulator, certain large steps will be taken. There is also another change in the offering as far as transference of property is concerned, right? And there is a title insurance policy that is meant to overcome that. What can you tell us about that? That's going to come in the new year as well.
Yeah, that's actually again something which is a very underpenetrated, segment of insurance in India. People don't really typically, buy title insurance. It essentially is an insurance which covers you for any loss that may happen because of a title dispute. So let's say if you're buying a policy and there is a title dispute that happens, or let's say you own a property and there's a title dispute that happens, which could impact, your asset value or your expected, let's say, income out of that existing asset. There is an insurance which will cover for that as well. It's very early stages into a product like this, and I think slowly as the market evolves, we'll also understand this better, and customers will also understand it better. But the idea is that there is an underlying asset which is your let's say a real estate property. That the title of that, in case that comes into a dispute, then there is an insurance which will protect you from the potential losses from that. So that's the concept of title insurance, and it will evolve as we go to the next year. But I think it's a very welcome step, because again, in India, this is something which is very rampant. Unfortunately, there are disputes that happen all the time, and people's life savings completely go for a toss. So all of that somewhere gets protected by this title insurance which is coming in.
Okay. Heading into the new year, Amit, in terms of what people should bear in mind, we've spoken about quite a few changes on the regulatory front that could bring landmark changes in the insurance industry. But specifically from the perspective of health, and I think that's an item that's very close to your heart, what do you think that people should bear in mind? We're around the time of the year, Amit, when people make New Year resolutions, so perhaps we can help them make one.
Sure. I think one very, very important factor that everybody must keep in mind is having adequate health insurance. Unfortunately, India is a very low penetrated health insurance market, and people either don't have enough cover or they don't have a cover at all. A lot of times people also depend on what they have from their corporates, from their employers, where let's say you have a 2 lakh policy from your employer and you depend on that. The challenge with that is that today it's probably okay, but let's say tomorrow or a year down the line or 5 years down the line, that will definitely not be enough. And secondly, it may be difficult at that stage to buy insurance for yourself as well. So if I have to nail down what the New Year resolution should be, I would in a very precise manner, I would say one must have adequate health insurance cover, which means at least 10 lakhs per person of coverage you must have. So if you're a family of, let's say, 2 adults and 2 children, then you should look to at least have 40 lakhs of cover. So 10 lakhs into 4 is 40 lakhs. That's the cover that you must have. So that's one. Second, also very important, is buying a comprehensive cover, which means that you should try and get a policy which gets you hospitalization at home, which gets you consumable coverage, which gets you things which are very relevant, specific to COVID in mind, because unfortunately it is a part of our lives right now. We hope all of us hope it goes away, but unfortunately it is a part which we all have to deal with, and you don't know what's going to happen in the future. So having those coverages, keeping COVID in mind is very, very critical. So I would say from a coverage perspective, these are two important things. And the third thing is, don't depend on your employer provided cover, because you may be working in a specific company right now. You may change your company. You may decide to start up on your own. You may decide to retire at a certain point. You can't depend on somebody else's provided cover to you. You should have your own coverage, because a very real scenario is that, let's say 5 years down the line, you retire or you move into something else. At that stage, you may not even be able to get a health insurance policy for yourself because of multiple reasons. Hence, having that cover for you is very, very important for you and your family, because you may not be able to get that cover at a later stage. So I think these are the three things which must be kept in mind as we step into the new year.
Very true. Thank you so much, Amit, for highlighting those aspects, as well as all the important changes that are in the offing in the realm of insurance. From all of us here at ET Now, here's wishing you and your team a very, very happy new year. And we'll speak very soon, I'm sure.
Thank you. Thank you, Alex.
All right. Now, on that note, we're slipping into a short break. But like I promised, there's a conversation that's lined up in just a short while. This is the Meet Your Fund Manager segment, so do stay tuned.